The title of today's Brandon's blog is Consolidation Loans in Canada. Is it possible to consolidate debt by using this one simple going postal hack? With Canadians feeling very uneasy about their household level of debt and a potential upcoming recession in Canada, Brandon thought it would be a good idea to write a blog on consolidating debt and what consolidation loans in Canada are and how they work. My name is Ira Smith, president of Ira Smith Trustee and Receiver, Inc. Both Brandon Smith and myself are available to answer any questions you may have, either about this Brandon's blog or anything else at all. So shoot us a message, give us a phone call. We would love to speak with you. I hope you can watch until the end of this video because I know you will find it informative. Brandon discusses down below and explains the whole concept of debt consolidation loans in Canada, and he describes a new potential lender offering loans. The loans they offer are not necessarily just for debt consolidation, but there's no reason why you can't use the money if you're approved for the loan in order to consolidate your debts. So Brandon first discusses what the advantages as well as the disadvantages are of consolidation loans and how they work. He then describes that if you're a student or a recent graduate, it's probably very difficult to consolidate student loan debt for the main reason that you have not been out in the workforce full-time enough to build up a credit history track record enough to get approved for new loans. Brandon then describes this new source of money, which is actually Canada Post, in combination with the TD Bank, are offering loans which you can apply for online. And Brandon explains the entire loan program down below in the blog, so I'm not going to repeat it all in this video. Then finally, Brandon gives other financial debt loan consolidation choices. Because if you feel you have too much debt, you may feel uneasy trying to solve that problem by taking on more debt. So Brandon gives 3 viable options instead of a debt consolidation loan. The first one is that many credit card companies, in order to entice you to sign up for their card or to use their card if you're an existing card holder, they offer free balance transfers, 0% interest, and give you something like 12 months to pay it off. So if you have a large credit card balance, say on your MasterCard, clicking away at 19 or 21% per annum, you may want to transfer that balance to the credit card offering you 0% for 12 months. The only thing is, you have to have it in your budget to pay off the entire balance within the 12 months. Otherwise, you will be subject to high interest rates all over again and maybe even additional fees. So that's the first choice. The second choice is going to an accredited, community-based, nonprofit credit counseling agency. You'll be able to differentiate that kind of credit counseling agency from a lot of scammers, because the scammers will charge you fees. a community-based credit counseling agency will not charge you a fee. And those kinds of agencies will help you prepare your family budget, look for ways to help you to save money, cut down on your expenses, and they'll even help you negotiate with your creditors to get some sort of interest moratorium. And that may, for some people, be just enough to follow the budget and start paying down debt without taking on new debt. And if neither of those two options work for you, the third option that Brandon discusses is financial restructuring through a licensed insolvency trustee. If you're an individual, it would be either a consumer proposal if you owe $250,000 or less, other than debt secured against your personal residence. And if you owe more than the $250,000, then financial restructuring is done under a different section of the Canadian bankruptcy and insolvency statute. If you're a company, there are two statutes that you can financially restructure under. Either the Bankruptcy and Insolvency Act, in order to stay in control of your company, to continue managing the company, to restructure it and have it continue on healthy after successfully completing a proposal. The second statute, if your company owes $5 million or more, is the Companies Creditors Arrangement Act. And that is also the other financial restructuring legislation in Canada for large corporations. So I hope you can read the entire Brandon's blog below, because I know you will get value from it. Again, both Brandon Smith and myself are available to answer any questions you may have, either about this Brandon's blog or anything else at all. So shoot us a message, give us a phone call. We would love to speak with you.